Welcome to Market Updates HQ, your command center for navigating today's volatile markets. We break down what's really happening with stocks, Bitcoin, gold, and the assets that matter most to your wealth. No fluff, no hype, just clear analysis of market moves and where smart money is flowing. Subscribe to stay ahead of the market. Let's grow your wealth together. There's a $90 trillion shift happening right now. Jensen Huang dropped this number at Davos, and almost nobody noticed. In the next 15 years, the entire world is going to be rebuilt to put intelligence into everything. Your car, your phone, your factory, your doctor's office, even your military. And the investors who understand where this money flows are going to make fortunes. The ones who don't, they're holding the next blockbuster. Let me break this down simply. For the last 15 years, the world ran on software. Everything was code. Apps, platforms, SaaS companies, they dominated the stock market. The Magnificent Seven went from $1.5 trillion to $22 trillion. Software ate the world, just like Mark Andreessen predicted. But something changed. We hit an inflection point. AI got good enough. Not just chatbot good, but replace your entire accounting department good. Anthropic's CEO said 50% of white-collar work gets automated in the next 1 to 5 years. That's not a prediction from some random Twitter account. That's from the company building the AI. So here's how to think about this $90 trillion number. There are really two tracks. Track one is the $6 trillion training track. This is what everyone's been focused on. The data centers, the GPUs, the NVIDIA chips, the hyperscaler spending. Microsoft, Google, Amazon, Meta, they're spending $650 billion this year alone on this. It's huge. It's real. But here's what most people miss. This is the smaller part of the story. Track two is the $84 trillion deployment track. This is where intelligence gets put into everything. Cars become rolling data centers. Robots become mobile inference nodes. Factories get embedded intelligence. Your phone runs AI locally instead of calling the cloud. Elon Musk said it best in his recent interview. Those who have lived in software land don't realize they're about to have a hard lesson in hardware. Now let me tell you about silver specifically, because this is the part that blew my mind. Silver is not a precious metal in this story. It's an industrial metal. It is, as one macro researcher put it, the synapse of the AI brain. Every smart device needs silver. Every solar panel, every data center connection, every drone, every humanoid robot. And here's the crazy part. If silver went up 10 times from here, 10 times, it would still be less than 5% of the cost of a data. Now here's the other side of this trade, and this is where it gets uncomfortable for most investors. If you own the S&P 500, you're roughly 50% invested in software and tech. You're about 5% in energy and materials. That weighting is about to invert over the next decade. Software stocks just had their worst crash relative to the Nasdaq since, well, there's nothing to compare it to. The 30-day rate of change of the software ETF versus the NDX is literally unprecedented. Not the rate hike crash, not Liberation Day, unprecedented. So, where does Bitcoin fit in all of this? This is the part most people get wrong. The common narrative is that Bitcoin is an inflation hedge, but some of the smartest macro minds in the world say Bitcoin's biggest move comes from deflation. Here's the logic. AI is the largest deflationary force in human history. It makes everything cheaper, faster, and more abundant. That collapses the value of software, of labor, of services. In that world, the assets that go up are the ones that are scarce. What's scarce? Silver, because you can't mine it fast enough. Copper, same. And Bitcoin, because there will only ever be 21 million. So here's the actionable takeaway. I'm not a financial advisor. This is not investment advice. But here's what the smartest macro minds are saying. 1. Rebalance away from software-heavy allocations. If you own the S&P 500, understand that you're 50% software and 5% commodities. That ratio is inverting. 2. Look at the physical world. Silver miners, copper producers, critical mineral companies. These are trading at generational lows relative to tech. 3. Understand that Bitcoin is a scarcity play in a world of abundance. 4. Watch the Bitcoin SaaS correlation. When it breaks, that's the signal. And 5. Use AI yourself. Don't just invest in the trend, live it. If you found this valuable, hit like and subscribe. I break down these macro shifts every week so you can stay ahead of the curve. Drop a comment telling me, are you more bullish on silver or Bitcoin for the next 5 years? I'll see you in the next one. Thank you for joining us at Market Updates HQ. If this analysis was valuable to you, consider liking this video and subscribing to our channel. Staying ahead in these volatile times requires accurate information, and we're committed to providing you with just that before you make your next financial decision. We'd also love to hear from you. Leave a comment below on which markets you're tracking and what topics you'd like us to cover next. Stay informed, and we'll see you in the next update.